I think in my mind, back to meme coins, maybe the speculative activity and all the energy there goes to something that is way more productive, which is real companies in crypto building real businesses. And now you can have whatever AMC-like speculative activity on them, but on chain and with real businesses behind. That would be really cool. Instead of meme coins, we'd be trading like crypto, low market cap companies. That'd be much, much, much more productive. But it also solves the problem that we currently are talking about, which is, can you IPO a company that has under $500 million of run rate?
This episode is brought to you by Skale, the next evolution in layer one blockchains. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at Skale Network. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Focal by Falcon X, the AI-powered insights engine built for institutional crypto. By leveraging AI, Focal empowers institutional investors to streamline research, anticipate market shifts, and make sharper investment decisions. You'll hear more about Focal later in the show. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Diogo, welcome to the show. Rob, welcome to the show. We got Empire. We got the app. Santi's joining us. What's happening, everyone? How we doing?
Doing great.
It's crazy. Lots of scrolling, trying to keep up.
Yes. If you want to see a group more egotistical than us, it's tough to find. We were just spending 5 minutes Googling ourselves. So that is how we like to start.
No, we're talking about, I didn't Google myself. I didn't fucking Google myself.
We were showing the worst pictures of each other. So at least that.
All right, guys, welcome. Rob is a partner at Dragonfly, if people don't know. Diogo is a partner at Haun Ventures, also one of the co-founders of Anchorage. We've had his co-founder Nathan on the show. Diogo, what are you doing these days?
Lots of investing, lots of stable coins, even though I guess my feeling is now that everybody's excited about investing in stables, maybe I shouldn't be investing in it anymore. It's too hot. It's too exciting. But spend the majority of my time deploying capital. My description is not a venture capitalist. I am an engineer that deploys capital. I see Rob shaking his head.
Rob, why are you shaking your head?
Because every time he says that, it's obviously not true. He's a venture capitalist. I don't know why he wants to hate on our whole industry of which he is a part of. Diogo, just embrace it. We are venture capitalists. It's fine.
Never.
Rob, give me this. Let's talk about venture right now. Give me the state of venture, because a lot of the firms, Haun included, Dragonfly included, raised these massive funds, right? You maybe raised fund one was maybe small. Fund two was massive. Fund three, everyone's raising right now for fund three. And where are these things going to shake out right now? What's the fundraising environment like?
Yeah, it's a little bit, and I'll be interested in Diogo's perspective here, because I know we're kind of, we're on a later fund than he is, but they had a really big first fund. What we're seeing in the market is that it's become a little bit of like a have and have nots situation. So like in 2021, basically everybody could raise funds if they wanted to. So everybody has said, hey, listen, I've spent a year in crypto. I can go and raise a new fund. I can raise $100 million, $200 million. And there was so much appetite from the LPs, whether it was pensions, high net worth, endowments, et cetera, that everybody raised in like record times as well, 2, 3, 4 months. That has completely normalized now. And so now what we've seen is similar to regular venture, not just crypto. The large funds are continuing to raise large funds, not as big as they did in 21. They're coming down because that, makes sense because there's too much capital in 21, but they're still raising relatively large funds. And then there's some, specialists, emerging managers who are raising, but it's much harder. There are a lot less people raising capital. A lot of people who raised too much money in 21 are having much smaller funds this time around, are struggling to raise. And that's caused what I think is a good reset in the amount of capital that's coming into, venture more broadly. And I think it's probably right sizing of the industry. And the same thing we're seeing in Web2 VC.
Yeah. Haves and have-nots. Who's actually outperforming Bitcoin right now? Because that seems to be the struggle. And not to dig into it right away, but I feel like a lot of the funds, Santi's an LP in a lot of these things. I'm an LP in less than he is, but a few of them, not many people are actually outperforming Bitcoin. So isn't that the core problem?
Well, I think that's true. I can tell you 2 of our 3 funds are actually outperforming Bitcoin. But I think the vast majority of people aren't, honestly. And it's tough. And we do, when we have conversations with LPs, like there is questions because all of them know crypto now. Like it's no longer like, oh, teach me about like what this asset class is. It's, why should I invest in you versus Bitcoin? Why is there not just like better ways to get, exposure to this asset? I can do the ETF now. I can do liquid funds. There's probably ETFs of longer tail assets coming. And so that is a question that we have to answer a lot more today than like we did, call it 2021.
So I think,
Rob,
go ahead, Santi.
I was going to say, look, Circle just ripped yesterday. And, no one was kind of expecting that. 25 times oversubscribed. Let's see where it shakes out. Like Coinbase had this phenomenon as well. Do you think that changes like the appetite for LPs to say, hey, listen, there is now like a crypto enabled businesses in the public markets like Robinhood and Coinbase and Circle that I can have exposure to? Like, why would I take the liquidity risk? I would just rather have exposure to that. Robinhood in particular, like I know like one of your guys, Rob Omar, has been public about it. It's like, it's interesting, has distribution, tokenizing stocks, stable coins, like they're going to capture and reap most of those benefits. Like, how do you push back against that?
Well, one thing that I'm going to say is that's actually absolutely the case. And one thing that had happened this year is like we've had 3-4 over $1 billion acquisitions and plus Circle. So to a large extent, these things are sort of diverging. Yes, you can buy Bitcoin. You can use it as a standard and as a measuring stick if you'd like. But the reality is that the private markets are actually putting out. I mean, we were part of Bridge. Bridge got sold to Stripe. It really was the starting gun for a lot of the stablecoin mania. And you're seeing a lot of markups. And so the reality is that the private market continues to be alive and well. There's lots of markups at lots of big companies, and Circle is just one proof point of that. And I do think LPs see that. And by the way, to come back to the story of LPs, one thing that Rob didn't say is that LPs in general, it's a weighting moving average of whatever has happened in the 12 months before or 18 months. And so it's kind of like a slow one. But I have to say that depending on when you started fundraising, if you started fundraising on Liberation Week versus not, and that affects, because there's this denominator effect. And if all of your assets are crashing, which we've had some crazy movements and crazy volatility, then that affects portfolio decisions too, and affects the LPs thinking through deploying specifically into venture capital, because it's highly liquid and it's marked up and it doesn't change with the market. And so percentage wise, the denominator effect means that you're over allocated to venture. So you start pulling back whenever the market actually has crashes. So that is very much a phenomenon that is alive and well.
Yeah, I think on Circle, like maybe I think Circle's a bit of its own, beast. So like, if you look at what has been the only public company for a long period of time in crypto that people have really traded, it's been Coinbase, right? Like that's been the exposure. And if you look at Circle, like based on where they were, earlier today, they're trading at like 33 times LTM net revs, right? If you look at Coinbase is trading at 9 times LTM net revs. And if you actually were to apply that 33 times to Coinbase's piece of Circle, so they get about 900 million LTM of revenue from Circle, that would imply that the rest of their business is trading at 6 times LTM net revs, which is below kind of all the exchanges. We're below NASDAQ, it's below CME. And so that would imply that people actually aren't that excited about the rest of crypto, but they are excited about stablecoins. So I think that might be a very specific thing that's happening there. And, to Diogo's point, we've seen the M&A market pick up. He mentioned Bridge. We were also part of a business called Hidden Road that got acquired. But I do think that we're just seeing a lot of interest in specific parts of the market, but the broader crypto interest is still very much tied to Bitcoin.
Yeah. On the investor side, so not on the fundraising side, on the investing side, it feels like the evolution of crypto venture was like, all right, we don't want to invest in these kind of scary crypto businesses, right? So like the ICOs. So there's like these traditional businesses being built in crypto. And Diogo, you built one of the best ones with Anchorage, BitGo, Coinbase, Circle. It was like on-chain businesses. It was kind of the businesses that wrapped around crypto. CeFi, right? Fireblocks, Copper, those kind of folks. And then it was like, oh wait, equity is actually really hard to exit in crypto. And a lot of the returns are made on-chain in these tokens. So let's pivot to the chains. L1s, L2 phenomenon. Then it became like more DEXs, things, lend, borrow, things like that. And now I'm curious if you guys think that the venture money got wiped out of the equity, the equity investments. Do you guys think the money will flow back into equity investments as there's actually finally, for the first time in crypto, a way for these equity investments to exit?
Yeah. Well, look, the answer is yes. I think Circle clearly, and all the acquisitions that have been happening clearly show that the answer is yes. One thing to say is that we're relatively new in the crypto venture. We've been around for just over 3 years, and we've always had flexibility, right? Equity and tokens, and taking equity position with token warrants. And so the reality is that many of these businesses don't know which path they'll take. And in many cases, not clear, especially at the earlier stages, which path is going to be the highest in terms of value capture. So you kind of like take an option of having both. And I do think that there are cycles, and clearly tokens in general have had liquidity much earlier. So you want that profile. And that's one of the exciting advantages of venture and crypto, is having earlier liquidity. But I do think that this is cash, like cash going to the pockets of LPs and early investors in a major way after yesterday's debut from Circle. And that's actually going to be, it's great for crypto, it's great for validation of the market, it's great for LPs to also see some liquidity back, which didn't happen in crypto. So I think this year specifically, you saw the acquisitions happen, which hadn't happened before, and one IPO that is an IPO, candidly, that I think speaks volumes of stablecoins, just because if you ask anyone in crypto in general about what they think about the Circle business, what you're going to get is they are a money market fund that wants to be a payment businesses. So they're trading at payment business levels, but they're really a money market fund, right? And so that's what they are. And by the way, a very one that burns a lot of money at that, not in a very efficient market fund. They're like a very heavy weighted money market fund. So that would be the general gist. And by the way, it was candidly my own too here, which is in terms of valuation, I would never expected this to come out to market and reach the heights of $19 billion market cap. It's not something I expected.
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Skale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Skale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high-throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Skale Network. That's Scale spelt with a K. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply.
So naturally, like what's next? Like you're founder of Anchorage. There's a number of businesses that could go public now, which is like chain analysis, Anchorages of the world. Is a key pitch here. Look, if you're a traditional investor in like private equity funds, like you have not gotten liquidity and you're not in a good spot. Is the pitch a lot to investors? Do you really emphasize the path to liquidity, which is like, hey, traditionally, if you're a venture fund in crypto, like there's a very clear path to liquidity via tokens in your portfolio. So like I'm just wondering, like, what is a second order effects of like the Circle IPO? Are we going to see the chain analysis of the world go public? How, like, in your mind, how does that shake out? And then what does that mean for like, are there other crypto companies that are maybe going to think, hey, maybe I'm not going to launch a token. Maybe I'm just going to tap into the public markets?
I really hope that's the case. And I don't know, because we'll see, but I really hope that's the case. Look, it's a much better world for everything that you just said from yesterday to today, which is companies like Anchorage and companies like Fireblocks and companies like Chainalysis, which are traditional businesses. They don't have tokens. In the case of Anchorage, highly regulated. They definitely they have a better path for IPO today than they had yesterday, even if it's in terms of perception and definitely in the eyes of the underwriters, right? Because in many cases, the underwriters are actually a little bit of the bottleneck, because some of these companies haven't reached the threshold of revenue, which right now, depending on who you talk to, they say $300 to $500 million for even for it to even be interested to some of these underwriters. There's other ways of going public, as we all know, with SPACs, direct listings, et cetera. But $300 to $500 million is, there's not a lot of businesses in crypto that are doing over $500 million, right, of revenue on a yearly basis. So I think that underwriting maybe changes a little bit. That's my hope for these businesses. On the other end, let me just also focus on something that Rob said, which is I think we're seeing a sliver here, which is this is the stablecoin bet. This is a clean stablecoin bet. That is, Circle is a stablecoin bet without all the confusion that Coinbase has. Coinbase has a cloud business. They have the trading business. They have the institutional business. They have institutional trading business. So all of these different components, you're underwriting them as an aggregate. And the story here in the narrative is like, how do I get exposure to this thing that crypto people keep talking about called stablecoins? And now you have a ticker that is called Circle that everybody will point to as, you can do it. You can't buy Tether, which is the largest issuer. So you're going to buy the second largest issuer, the second best, right? And so you can buy the second best right now out on the markets. So I think that's what's happening here. And in terms of, by the way, your first question of on the LP basis on liquidity, I don't know if we can overemphasize it, but it is a fact that there's earlier liquidity on tokens. And of course, look, we're venture investors, we're long-term holders, we're not selling these things after we invest. And so we're not doing that, but there is the capability of doing it, especially if you think about things like staking, et cetera. There's a different profile of investments if it's crypto venture.
Rob, what do you think about this?
Yeah, maybe I'll add one thing, and I'll start at the last point that Diogo said, which is the LPs are always 18 months or 24 months behind the market. And so right now what we're seeing is that the venture capitalists are actually much more interested in equity again. And so starting with Bridge and then all the M&A that we've had, over the last, call it 6 to 8 months, we actually have 3 equity only businesses that do not have tokens, do not have token warrants that are getting priced up right now, significant markups. We've got other
in the private markets, they'll be able to raise a Series D or okay.
Yeah, Series Bs.
Who's investing late stage? Because that's been one of the problems historically. Is there's no late stage growth, like the growth round investors in crypto.
Yeah, there's not a lot of us, to be honest. Yeah. What I'll say 2 things. One is, we'll get involved there sometime. There's Paradigm, there's Andreessen, there's Haun. There's, maybe, a couple others that will get involved there on the equity side that are crypto native. What we've seen is if it's stable coins, or maybe an exchange because of Coinbase, we will see traditional Web2 investors are back in. I was talking to one entrepreneur. I was at Money 2020 this week. And I was talking to one entrepreneur, I guess it was yesterday, who had raised for a stablecoin business. And he talked to 83 venture capitalists, during his raise, which was an outstanding amount to me because, it's in crypto, I don't even know 83 venture capitalists, but all of the traditional VCs wanted to talk to him. And he was telling me, he's like, listen, I talked to all of these venture capitalists and probably 10 of them had any idea what was going on in our business. When we talked about, RWAs and tokenization more broadly and what we wanted to do over, the long run with our business, it was, people looked at us with a blank stare. But, there was, a middle group of 50 or 60 who were saying, oh, stablecoins, this is really interesting. We need to get some exposure to it. And we're seeing a lot of that interest across the valley. And so again, it's a really a bifurcation between the two. But those people are coming back, but they're coming back for that specific sliver.
Yeah. Okay. Let's play a game. Who are the outside? We'll talk about the corporate treasuries. Let's get that out of our head for a second. Who are the next 3 to 5 crypto companies that IPO?
It's tough. So I agree with Diogo that you're really most of the crypto companies today are really smaller than what would be ideal to go.
But there are some folks that are big. So I'll throw out some names to start. It's you got Kraken, there's people who do more than 100 million in revenue. I don't know, Fireblocks is probably around there. Anchorage, I don't know if you guys are around there. BitGo might be around there. But I think historically I've thought these guys are a little too small. But I think talking to people, everyone's looking at this Circle IPO saying, oh my God, there's insatiable demand in the public markets. Maybe we should actually do it in 25 and 20 instead of 26. So I want to get your guys' takes on that.
What I would say is I think that is people's perspective. Mm-hmm. I'm not sure that I buy into that perspective. And if the IPO market is definitely open. CoreWeave has done really well. We're seeing a lot more of the traditional fintechs come back to the market who had previously shelved. Obviously, Circle is incredible. I expect a lot more people to try to IPO more broadly. This is not a crypto specific point. And to your point, there is the Fireblocks who's been, wanting or thinking about an IPO for a long period of time. But, relative to what, if you went and talked to somebody at Goldman, what they would tell you is ideal profile for a public company, Fireblocks is not there. Right. And that's true of Chainalysis, which is a great SaaS business. That's true of most of the other people we talked about. Kraken is a different story. And, I expect we'll see them public, maybe not this year, but maybe next year but I'm sure that's a moving target. And I think some of the exchanges are maybe different stories and some of the brokerages because they scale with the market really quickly. But for the other guys, they might force themselves public. And I expect that we'll have a number of less than ideal people that we're not even talking about who will just say, I need liquidity. And
what do you mean force themselves public? Like SPAC or something like that? Or
they might SPAC or they might, be talking to their underwriter and the underwriter's like, listen, I don't know if there's, a lot of demand for your business, but we can get you public. We can do direct listing, or we'll just have we'll raise $100 or $200 million instead of the $1 billion that Circle raised in the IPO. And I expect we'll see a number of those. Because again, I'm not sure that this Circle story is transferable to the rest of crypto.
That's fair. And one of the things that ends up happening is for you to be public, one of the things that you want. And actually, this was very clear with Exodus. So Exodus is actually maybe a good example because it's a crypto company that has a wallet that went public. And I think the story there is, I think it sits at $800 million market cap. It was just over $1 billion. But it had, $50 to $80 million run rate. So clearly under $500 million. And then it's interesting because the price sort of languished post-IPO until they actually got covered by analysts. And then after the analysts, things started picking up a little bit. And so it's just, are you included in the category by the analysts of crypto companies that you can get exposure to? I think it's a little bit of that story. And are you going to be covered by the analysts? And are you interested enough? And it turns out if you have under $1 billion of market cap, and really $3, which is where the $300 million, 10x, just call it a 10x multiple. That's where the $300 million, $500 million comes from, right? $3 to $5 billion valuation. If you're much lower than that, analysts are not going to take their time to cover you. And if analysts are not covering you, then people aren't really, the large institutionals aren't really going to deploy capital, which means that there's very limited liquidity. And then the price may languish and things, you're just not getting the price that you deserve. So Exodus Wallet now maybe is a good example of what it actually looks like for you to have a subscale IPO, which, it wasn't a terribly amazing success, but it wasn't a failure either. And so I don't know, maybe that can be emulated. But I think the question is, if you want to go the traditional route, will the underwriters actually take you out? And maybe this multiple on Circle, and I agree with Rob, is not the same thing, but maybe it will kind of whet their appetite. I would say that there's 3 categories of companies that would be next. Number one, something that already has an equivalent in terms of trading to a public market and has scale. So Kraken, a great example. We already know how Coinbase works in terms of trading multiples. The second one would be things that actually have recurring revenue and, look a lot more like a SaaS product. So a Fireblocks, a Chainalysis, recurring revenue, attach rates, churn. You can sort of measure these things and it's not really dependent on the market. And then the third one are actually businesses that are highly dependent on the price of Bitcoin and on the price of cryptocurrencies, which you have variable revenue and you really don't want that amount of volatility and not to have been diversified before you go public, because otherwise you're just going to be strictly correlated to Bitcoin. Nobody's going to give you the value that you deserve. And they're just you're by volatility, right? You're just a Bitcoin tracker, publicly listed, and you don't really want that. You don't want to be CEO of a publicly traded company that only has direct exposure to the market volatility.
Yeah. Diogo, can you take us into the board meetings of Anchorage right now and divulge everything? No. And can you, and tells everything that happens in them. No, can you tell us in the room, because this must be a conversation. It's look, we're maybe a little small to IPO, but we've got a phenomenal business, great customer set. Do you start making acquisitions right now? Do you wait until the next cycle to IPO? Are cycles dead? Are you waiting until 27? Do you go raise a late stage? How do you make a decision like this?
So for Anchorage is very different. I think Anchorage, we all know that it has this long-term goal of being public. The only thing, what we sell at the end of the day is trust. That's why we're the first and still only federally chartered bank in the US that does crypto custody, et cetera. But the only thing that is more trusted than a federal bank is a publicly traded federal bank, right? And so the path to trust adds a lot of value to the business. And I think that is the path that we're on. And it's always been the path that we wanted to be on. And so that to us is slightly different than another company that may stay private for much, much longer, because we do have a goal and that just benefits the business in general in terms of trust, which is what we sell. To a lot, and another reason why Anchorage is potentially a great candidate is also being a bank means that you already have all of your financials in order. You already have stuff that is audited. You already do reporting. You already do a lot of the heavy lifting that is necessary for you to go public. I was at Square when we were preparing to go public, and through the IPO, and how crazy that setup was. And it's intense, but getting a bank charter is also very intense. And so maybe in that sense, we're also further ahead. But the questions still maintain, which are what John and the Collison brothers kind of like talk about publicly, which is why, what do we have to gain? And if you have an amazing balance sheet, you have more money than you need, you are growing, you are diversifying your business model, you are becoming more and more attractive each month that goes by, and you can do all the partnerships, and you're really like leading the pack on all the areas that you want to lead. What is this going to really get you? Like, what is having access to the public markets really going to get you? Like, do you want to issue debt? Do you want to have some strategy that the capital markets are required for that? And then at the end of the day, the answer is no, there's no specific strategy there. And yes, the trust would be amazing. But it's something that we're walking towards and making sure we're ready for. And think about optionality. We want to be in a situation where if we think it's the right thing at that moment, we're ready and we can immediately do it, but not something that is kind of like a big mandate that we must do it. It's how we think about it and how the conversations go.
Yeah.
And by the way, the other thing is that obviously as part of our board, there's venture investors like liquidity. And so there's always like, nobody's pushing us, but there's a little bit of like, great, Anchorage, it'd be great to see this publicly listed.
But like, isn't there also the benefit, like for your business, you talk about trust. There is more trust if you're a public company.
That is exactly right. And that is one of the biggest benefits for Anchorage, and one of the biggest reasons why that would be good for us. But that doesn't apply to the general crypto company on its own. I mean, it does, but specifically for our business, trust is really the thing that we sell.
Maybe switching gears a little bit to the other side of the public markets right now, you have all these corporate treasury vehicles. And I've actually noticed you guys have mostly been absent from some of the, it's like I see like Parify, Galaxy, Pantera, Electric, like the same name, maybe Coin Fund, like showing up on some of these. Rob, I saw your tweet the other day. You said, as you can tell, I'm not a fan of these public crypto treasury strategies, which are clearly just point in time solutions that have no reason to exist over any reasonably mid to long-term time horizon. So maybe you can expand on that thought.
Yeah. So
that's why we call him Spicy Rob. I didn't know we did call him that, but I can start.
As a matter of fact, I did not know that, and I wish I knew that.
I didn't either. We're all learning.
We can make that stick, Rob. We can make that stick.
Yeah. Okay. I can't wait for that. Thanks, Diogo. Listen. They make perfect sense for the right pool of capital who wants to trade into these things. And what do I mean by that? I mean, you're very likely to make money because you trade into you give these people $300 million and they lock you up for 40 days, 30 days, maybe 60 days, very short periods of time. They go out and they say they're going to buy, an asset that you are maybe long that asset anyways. And in some cases, they're taking in-kind contributions. So it's almost a way to like monetize like your ETH or your Bitcoin or whatever else, because you can send that to them and then take this, lockup. And, they're mostly trading today at, some premium to NAV, anywhere from, a little bit over 1 all the way to, I think SBET, when I looked yesterday, it was like 10 times premium to NAV. And this usually has something to do with, what the exact capital structure looks like, but also, who's on top of it. And if there's a lot of excitement around, a specific person or a specific group that is running this thing. But over time, these are going to trade back down to NAV. And in a distressed market, they are probably likely to trade below NAV. Many of them are anyways. And you can get yourselves into a situation where, depending on how you finance this thing, especially if there's debt involved, where you may need to sell the underlying to pay off your debt. And which means that because then your value will go down, and you may have also people converting into equity and diluting the broader shareholder base. You get into this situation where you're in a death spiral. And that's going very likely to happen for some of these vehicles over, certain types of market cycles. And so I don't think they need to exist, but I understand why people are doing them to make money. I don't think it's right for our pool of capital, which is why we haven't invested in them.
Rob, we could have been sitting here talking about the exact same playbook happening for MicroStrategy 2-3 years ago, and it didn't. So like that would be the pushback that someone would be like, wait a minute, like this clearly hasn't played out for MicroStrategy. So what would you say to that? Like I ascribe to your view, which is like 99% of these vehicles unwind really nastily and trade below NAV in a down scenario. we're not there yet. But what would you say to someone that's pointing a MicroStrategy that has clearly defied gravity?
Listen, I think if you point to a single example and then you abstract that out to what is happening now, which is a significant amount of new vehicles that are all capitalized somewhat differently, that are loosening the lockups, that are, in many ways, they're usually the offerings are kind of looser and are more, or they're more punitive on the actual equity holders. Like it's clearly there's like a mania and people are just trying to monetize. By the way, people had the same conversation about the GBTC trade, way back when, right? And there was many people who was like, hey, listen, the premium has existed for 2 years. Like, why would it ever not exist, right? And then all of a sudden it blew up Three Arrows and, a couple of other funds, and we know what happened then, right? And so I think it's the wrong conclusion to look at what Saylor has done and incredible. Like, he deserves all the everything we could say about him. That's good. And then say, okay, well, like all these other people can do it on all these other assets in all these other ways, and that we won't have adverse selection.
Yeah. Well, by the way, my view here is mimics Rob's, but I think it's simpler, which is it's a trade, and I'm a venture investor, even though, I'm not really, but I'm
See, there you go. You said it.
Capital.
Not an engineer, he's a venture investor.
But it's a trade. And so I think we have to tell ourselves the real story is the right holding period for Bitcoin was 15 years. The right holding period for Solana was through FTX all the way to the other side. And so as a venture investor, we're not looking for trades. I do think in crypto, you get early liquidity and maybe you have holding periods that are not 10 to 12 as the private markets are kind of like aiming towards maybe like closer to 7 to 10. But still, you're taking a long-term position and you're working with these teams and you're trying to help them out. At least that's like that's the pink view, rose tinted glasses view of venture that I very much subscribe to. That's what I have fun doing, not really doing trades. I think in crypto, because everything trades, everything becomes a trade. But I do think that there's different vehicles for that. There's people that are going to make money out of it. There's hedge funds. There's all these things. As far as we're concerned, we're venture investors. And yes, we have a liquid portfolio because a lot of the value capture happens in liquid tokens, but we still look at holding periods that are venture holding periods.
So I was like talking to Jan about this the two last weekly roundups were like, hey, listen, look at the NAV on these things. And it's telling you like there's clearly appetite in the public markets to get more crypto exposure via traditional methods. How do you like translate that into how you express your views into investing in the private markets? Like what type of companies? Like Diogo, you mentioned like the stablecoin trade's kind of over. Rob, I don't know if you agree with that, but like
no.
Clearly like people want to go long stablecoins. Like the left curve was like Circle is synonymous with stablecoins, USDC, long the shit out of it. And that's like the market expressed that view. Like, is that going to hold? TBD. But like clearly there's like, I don't know if it's the same set of investors that is like punting the like pushing the NAV of these vehicles higher that is going to, if you have more real crypto businesses that IPO like a Fireblocks or Anchorage or Chain Analysis, do you think that it's the same type of investors, or is the investor that is like going long soul strategies in some of these vehicles like just pure speculators? I'm trying to understand, like, from your perspective, how much demand is there really for more crypto businesses, not crypto trades? Because I think there's a lot of like sophisticated hedge funds that are, doing these trades and like are cleaning up the Jane Streets of the world. I'm trying to understand how much is it retail, is it institutional?
So before I answer that, let me just say that both myself and Spicy Rob over there, mid-curved Circle, we were straight up like, no, but it's a money market funds, whatever. So we mid-curved it. That's absolutely the case. And either
for now, you might be in a year's time be very correct. So
that's right. Either we're wrong or the markets are wrong. I don't know which one is likelier, but we'll see. As far as what you're saying, as venture funds, and I think it's the same for Rob, our LPs are looking for a particular type of product. And in particular, it's kind of interesting because to the prior conversation, they dislike trades and they don't give you tons of benefit for a trade. You might do a trade or might do an investment that they feel like it was a gamble or it was a trade, and they're not actually giving you that for the next fund in terms of credit. So it's kind of funny because they don't give you credit or as much. Obviously, if you return 100x DPI forevermore, doesn't really matter what happens. But if you have a trade, you have a lot less credit than if you have a consistent portfolio of hits, because they're re-underwriting every new fund. And what they want to know is that there's method to the madness. And these large LPs, we have sovereign wealth funds, we have foundations, we have the largest, highest, biggest LPs. And what they're looking for is, I don't understand this market. I want exposure to this market. I know the market plays in two ways. It plays in equity and plays in tokens. I'm going to give it to the professionals that can actually decide which one is the best, or both, or at what times, and how to actually manage liquidity and manage the portfolio and help these companies get to a successful outcome. And what they want is professional managers to kind of like come into the space and help them through it. And if they wanted exposure to just liquids, there's those products. And if they wanted a hedge fund that is just taking advantage of the trades and is doing some kind of high frequency trading or just arbitrage, then those also exist. But our clients, the LPs, two sets of clients, you have the LPs and you have the founders. But on the LP side, our clients really want this product, which is professional view over the space in a repeatable process that works over multiple funds, so they can continue backing you over time and not really trades.
Yeah, Santi, I'll answer part of your question kind of more directly too, which was just like who's trading these things. And you can see in the filings, as they come out, not all of them because they haven't been out long enough, like who's actually buying these things. And it's not the same investors that you would expect to see, or you see in Strategy, or you see in Coinbase, or you see in, I'm sure you'll see in Circle. It's not the T Rows, it's not the Black Rocks. It's people like you're talking about who are doing some sort of like arbitrage trade, or they're maybe long and short one area or the other, that they're trying to figure out how to make money on this product, but they're not people who have like fundamental view on where this asset is going over the long run. I think you're probably seeing some of that in maybe like a Sol strategies, because there are people who don't want to touch spot and want to be long Sol. But like the Bitcoin vehicles, I don't think you're seeing any of that. It's entirely people that are kind of long one, short the other, and that are trying to figure out ways to eke out some sort of kind of arbitrage trade.
This episode is brought to you by Skale, the next evolution in layer 1 blockchains. With a gas-free, invisible user experience, instant finality, and robust security, Skale allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Scale's high throughput, zero transaction costs, and powerful Web3 infrastructure make it the ideal platform for gaming, AI, and other high throughput apps. To explore the gas-free ecosystem, visit scale.space/ecosystem and follow their journey on X at Skale Network. That's Scale spelt with a K. Thanks to Skale for making today's episode possible. I wanted to take a moment to tell you about Marinade, the platform connecting Solana holders with the best staking rates on Solana. Marinade unlocks a high-performance staking delegation platform that brings billions in liquidity and security to the Solana market. With solutions for both individual traders and global institutions from both DeFi and traditional finance, use Marinade to earn rewards on your Solana treasuries and holdings. Optimize your Solana staking with Marinade's best in-market features, including user downside protection through protected staking rewards, and optimized delegation via Marinade's automated auction marketplace. To learn more about Marinade, visit marinade.finance or click the link in the show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply. How does Hyperliquid and the success of Hyperliquid impact the venture strategy?
I mean, I don't know if it does, right? Hyperliquid's incredible.
Well, here, I'll add context to that, which is I think you'll end up seeing, even outside of crypto, right? You'll see more and more successful with, Diogo, you and I talked about this in Dubai. It's like you can just get a startup off the ground now with like very small amounts of capital, very low amount of human capitals, financial capital and human capital. You can get like these 3-person companies live that can get to, tens of millions, hundreds of millions in revenue. How does that impact the venture landscape? And I use Hyperliquid because, I don't know if you guys tried to throw money at Hyperliquid. Most of the venture firms I've talked to have tried to convince Jeff at one point or another to take a term sheet, and he said no. And they're one of the biggest success stories, arguably the biggest success story of the cycle. So with that context, how do you guys think about it?
Yeah, maybe I'll take a certain view here that I think is also helpful, which is that if you look at what's happening in AI, that is also true, right? So like what is happening with Cursor, what is happening with AI tooling, the amount of companies that are going from 0 to 10 million of ARR with like somebody vibe coding and like, maybe 1 or 2 people it's incredible right now. I don't think we've ever seen anything like it, right? And so the same thing is happening in Web2 VC that is happening in Web3 VC, which has always been true in Web3 VC. Is it's capital light. It's also light in terms of the amount of people that you need to build a really good protocol, and that kind of convergence has, I think, what's really incentivized people to do is go earlier stage, right? And so more and more people are fighting for seed and pre-seed checks, and that's also meant that seed and pre-seed have gotten very expensive, and on a relative basis and a historical basis. And that's probably the biggest change we've seen. And we've seen a lot less people, to your question earlier, Yano, be willing to fund people at the B, C, D, E stage. But I also think that's means that there's opportunity there, because there's going to continue to be capital needs for companies at that stage who want to accelerate. And I think this, like, getting really early, if you're a really big fund, the math doesn't really make any sense. You can do a $1 million check on an $800 million fund, but your best result in that thing is probably nowhere near returning that fund. And the math doesn't work, and the time spent doesn't make sense. And so it's incentivized people to do this thing that I think is actually somewhat illogical to the way like venture math actually works.
Also, I would say you have to update the model. There's another decacorn in crypto, and one that rose extremely fast at that. And so that actually is extremely positive to continue investing in these companies. And sure, in this particular one, there wasn't as many venture dollars as the venture community would have liked, but that doesn't mean that you're going to change your strategy. You're going to go earlier, going to have better relationships, and you're going to see, whenever you're underwriting your models, what the outcomes are higher now. Your $10 billion outcome was very unlikely, and now it's a little bit more likely. The same thing that Rob is saying in AI. One of the things that is changing is that you can invest in a seed round at $1 billion valuation now, because there's $100 billion outcomes. And before, there was no credible path to $100 billion outcomes, because there was essentially no $100 billion companies, even market cap out there, publicly traded, really. There were very few of them. There was like 5 or 10 years ago. And so now you have them, and you have lots of them, and you have the growth and traction revenue that actually justifies it. And so if the pie, if the prize becomes much higher, then the entry valuation.
That's an interesting insight, is that this is going to end up, this dynamic will push seed stage, early stage valuations much higher. That's interesting. What do you guys think about, Santi and I were talking about this on the roundup, the PumpDotFun fundraise. I'd be curious to, I don't know if either of you guys participated in that, or if you're investors in Pump, but $1 billion rumored raise at a $4 billion valuation. Give me your thoughts on the deal.
I think it's an interesting fundraising mechanism. My impression of it and the way that it works is that retail actually gets an advantage over institutions, in that institutions don't really get a big advantage over retail in this particular one. They kind of come in at the same price. And everybody is on equal footing here, and everything, if I recall correctly, all the unlocks are basically the same for everyone, and they barely
explain this. How do they structure it like this?
So institutions come in, you can buy, I believe, from them directly, but you buy this in valuation that they're going to be selling it. I think the structure that they have is they went to all the exchanges, or they went to many exchanges like Bybit, et cetera, and PumpDotFun, and they can sell directly to the market, to both retail and institutions, directly there on the exchange, and you can buy it. And then I think the original plan was there was going to be a little bit of an auction at certain increasing valuations, but then everybody else, every day there's going to be an auction, and you can buy at whatever clearing price. So there's an equal footing of institutions of the original idea. I believe the implementation is actually going to be the same. We'll see. But there's an equal footing here that doesn't exist in the past. One of the criticisms of, by the way, the founders of PumpDotFun was that in many cases, many coins are VC coins. Why? Because Rob and I have advantages of investing at seed, and then at Series A and at Series B, pre-TGE, right? And so when it comes to market, we already have our positions, and hopefully our blended valuation is lower than the valuation that actually the markets give it whenever it comes public. And herein lies the venture investor and holding for the long term and helping the teams. That is the value, right? But then the criticism on the other side is that this is not publicly accessible to every retail investor, and so they don't have the advantage of investing in the private markets, and so they lose out on the majority of the appreciation, because when you TG, you already have the majority of the multiple. That is the potential criticism, and part of the reason why that team is consistently railed against what they call "quote unquote" VC coins. And so it's kind of interesting that they do a mechanism of fundraising that is, in their view, more fair to retail, and that is equivalent for investors.
Rob, are we a fan?
Yeah. Listen, I think it makes sense. And I'm not, I guess I wasn't aware of all the things that Diogo said. I think as I understood, it was basically just one big ICO at $1 billion. I wasn't clear that there was like an auction happening.
The mechanism may have changed. When I was talking to the team, these mechanisms were the ones that we were talking to. And you see in the team the passion of equalizing the playing field. I think it borders on nihilism of crypto in many cases. But there's this attempt at kind of like having an equal footing and an equal playing field between retail institutions. That has been the gist of it.
And I think whether there's an auction or not, the point is the same, which is that if it's a $1 billion ICO, and as I understand it, like something like 80% of that is actually meant to go to retail. And so like in a lot of the institutions who put out allocation requests actually got like jammed down. And so like if that's the case, right, it's the same thing, which is that they want everybody to be on equal footing. They want a lot of retail exposure. They want people and everybody's unlocked, as I understand it. Everyone who's participating in this ICO. And so like if that's broadly true, at $4 billion for how much revenue they've done, it doesn't seem crazy to me, especially on the crazy multiples that crypto generally trades on. And so I am not investing personally, but I think that they've clearly they've offered a business that people have wanted, and people have been insatiable in using it and continuing to just trade on top of it and to launch new tokens. And that service is valuable, and it's probably worth the $4 billion, if not more, considering the way people have used it. So I think it's totally fine, to be honest.
Yeah.
Let me just say that I think I've discussed this on stage in an Oxford style debate, but I still maintain that meme coins are net negative for crypto as an overall. I think all of the attempts at saying that they actually have a positive impact fail any kind of rationality. The testing, the infrastructure, obviously these markets are free and you can do everything. And so you could always do meme coins, and that's nothing that we can do to stop them. And that is part of the bargain of having a decentralized system. But I just don't see that they have utility. Imagine that you have a funnel of people into crypto in which the first thing you do is punch them in the face. You get a new user, you punch them in the face, and that's their first experience.
Hasn't that always been the case though?
It has, not to this negative EV. I think meme coins are even more negative EV. I think when you were investing in whatever was the ICO that you were initially
governance
doing.
tokens, I guess.
Yeah, but even those, it's kind of like, you can say that they're meme coins, and then we're back to the same thing. Those were also bad, and I would agree that those are also bad. But legitimate teams.
What I'm saying is something start as meme coins, and then they, I guess, gravitate towards something else. But I guess. I
think in the purest form, meme coins do not have any goal whatsoever.
In its purest form, yeah.
Yeah, in its pure form, which is what they trade on. My impression is that there's no attempt at ever upgrading a meme coin into something that actually has any kind of underlying governance mechanism or any kind of value capture in the future.
What is worse?
Include like all of the AI tokens.
Well, that's like, where do you draw a line? Like, what is worse? Something that does not pretend to be anything else other than fart coin. And people are 100% aware that it's just that, or things that sell themselves and paint a grand vision, but have no substance behind them. And I'm just kind of curious.
So
what do you think is worse?
The worst are the scams, are the people that promise you one thing, that it will have value, that it will have governance rights, that has some amount of value accrual, and then obviously does not have it, and it's a scam, and there's a rug pull. Obviously, that's criminal, right? That's just outright way worse. And I do think meme coins in their iteration are pure in the sense that there's no attempt at telling them or telling people that they're a gambling instrument. There's no attempt at telling that this has like long-term value and these are trading wars and you're just trying to get out before the next person. So in the ranking, they definitely rank above in terms of clarity. You're telling what people, but that does not mean that they're net positive. They're still net negative. Both of those things are below the line of EV. They have negative EV for the user. They have negative EV for the space itself.
I wanted to take a moment to tell you about Focal by Falcon X, the AI-powered insights engine built for institutional crypto. With Focal, you can create charts and generate answers to questions in seconds. Used by over 80 funds with more than $10 billion in assets under management, you'll feel like you have a team of analysts at your fingertips. Ask Focal questions like, what's causing the uptick in liquidations? How much Bitcoin did Michael Saylor buy last year? And what is crypto's correlation to traditional markets? Focal pulls data from trusted sources like CoinGecko, Token Terminal, and the tie with enterprise-grade privacy and security. Learn more at askfocal.com or check the link in the show notes. Thanks to Focal for making today's episode possible. Hey everyone. Earlier in today's episode, I mentioned Petra, a top non-custodial wallet developed by Aptos Labs. They just launched Earn, a new feature to access DeFi with just one click. Earn lets non-US users deposit USDT directly into Ares Market's lending pools to gain interest and rewards, and manage it all directly from the Petra wallet. Petra Earn was designed to make DeFi more accessible for everyone. You can manage your balance, claim rewards, and deposit directly from the app. This is, of course, not financial advice. Participating in DeFi carries risks. To learn more, visit petra.app/earn or by hitting the link in the description of today's episode. Ever wish you could access cash without selling your Bitcoin? LEDN, the global leader in Bitcoin-backed lending, makes that possible. Since 2018, they've issued over $9 billion in loans, and not a single Satoshi of client funds has ever been lost. Here's what makes a LEDN loan different. With custodied loans, collateral is not lent out to generate interest. No credit checks, funds in less than 12 hours, and no monthly payments. Repay whenever you want with zero penalties, and they don't just talk security, they prove it. LEDN offers proof of reserves reports verified by a top accounting firm every 6 months. LEDN is 100% focused on doing one thing better than anyone else, giving Bitcoin holders a secure, transparent way to unlock liquidity without selling. Click the link in the show notes to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Let's talk about the positive. Like, you talk about the stablecoin trade being over. What is the most exciting thing in crypto? Where are you guys spending most amount of time, and where do you see the most amount of opportunities?
So I think, the other one that is still to come to fruition, but will probably have a stablecoin-like moment is obviously we've been talking about RWAs for a long time. I hate the term RWAs because, real world assets, what other world do we have in the real world? But let's talk generally tokenization. And in fact, we would all make the claim that stablecoins are the success of tokenization. They're tokenizing the US dollar. And so they're an instantiation of the generalized tokenization and a great one at that. And in fact, if you think about it, there's very little difference between tokenizing a dollar in terms of infrastructure and architecture and, all the routers than there's tokenizing other things. And so the same structure actually works, the same wallets, the same layer ones, the same principles and architectures and APIs, they kind of work. And so we're actually making progress on stablecoins, making progress on the generalized tokenization overall. We haven't quite seen that happen. The two things that I'm spending a lot of time on are, two things. People call it internet capital markets, but I'm calling it also on-chain IPOs. I do think that we've had a big problem with IPOs, coming back to our prior conversation. What if there was a way for us to not lower the bar of quality, but just lower the bar of revenue for a company to go public? And there was something intermediate between, a pink slip or an OTC trade and an actual NASDAQ listing. What if there was something in between, something that you could do on chain, something that would help you with the compliance? You'd have 2 years of audited financials, and you can list your $50 million run rate company.
This could be like being able to list, maybe Anchorage is a bad example. Yeah, let's use Anchorage. Instead of Anchorage waiting to go public on NASDAQ or NYSE, Anchorage could go public on chain, Ethereum, directly on chain.
And by the way, wouldn't it be awesome if by doing so, you're actually...
Yeah, this is the future. That is a very exciting idea.
And then, and by the way, these do not have to be one or the other. I think it's Robert Leshner that says these things can exist in a superposition, right? You could have a token on chain and listed token, and basically they exist in a superposition where they have both rights and you can interchange for one another. And I think the cooler version of the world is where you start by going on chain when you have low revenue, and then that allows you to upgrade into NASDAQ on a one-click button. Imagine that. Imagine that you can one-click after a few years in a on-chain traded token, and then all of a sudden you're in the NASDAQ because you've already reached whatever threshold and you already have historical views and, of the business. That would be really cool. I think that's really fun because it solves two problems. I think in my mind, back to meme coins, maybe the speculative activity and all the energy there goes to something that is way more productive, which is real companies in crypto building real businesses. And now you can have whatever AMC-like speculative activity on them, but on chain and with real businesses behind. That would be really cool. Instead of meme coins, we'd be trading like crypto, low market cap companies. That'd be much, much, much more productive. But it also solves the problem that we currently are talking about, which is, can you IPO a company that has under $500 million of run rate? Why don't we just solve our own problem? That would be amazing.
Yeah. I hate when Diogo and I agree, but we definitely both agree about like broader tokenization.
That is
said,
not the spicy Rob I know.
I will say that I don't think the stablecoin trade is over. I think like stablecoin infra trade is over, but there is so much more to do in terms of getting stablecoins in people's hands, making them usable, figuring out ways to add value to that end consumer with stablecoin related finance. That there is actually a lot more and a lot more things that we're interested in investing in around that space. Am I likely to invest in the fourth chain that Tether had backed? No, I'm unlikely to do that. But am I likely to invest in things that are using stable coins as a core piece of providing value to an end consumer? Like absolutely. And we're still
100%. By the way, right now the value capture in stable coins is very much an inverted pyramid. It's a pyramid, and it's about to be an inverted pyramid. It's a pyramid because the issuers make all the money. Then you have the routers and the infrastructure providers that make some of the money. And then you have the apps that make no money. And eventually that has to invert. The issuers get squeezed. Yeah. The middle layers that add value continue to have some value capture. Then the apps make all the money. And right now we haven't, there's apps out there. They're now actually like some of them having very exciting markups, equity companies, the global Venmo, et cetera. They're taking advantage of the fact that stable coins actually give you something, which we have a shot at the first truly global fintech. Fintechs have generally not been global. Yeah. Revolut doesn't exist in the United States. The American companies don't exist in Europe. And part of the reason is because if you want to be in 150 countries, you have to go to 150 countries. And stablecoins invert the onus of integration. You already have a Schelling point, an integration point for all 150 countries. And in fact, we've all seen these pitches. You have in every single one of these countries, some local on-ramp actually doing the FX and local exotic to whatever USDC or USDT trading pair, and then giving you that hook. And so you can truly have a global fintech that integrates with one piece of technology and just operates in all the countries from day one. And I think that's truly exciting as a venture investing. So I totally agree with Rob. I want to disagree on principle because it's way spicier when I disagree with Rob. But I agree with this. The apps are very exciting in the next wave.
I've also go ahead, Rob.
Well, I was going to say, it sounds like a pitch for I heard invert 3 times in there. And so it sounds like you paid him to do that, Santi.
I did not. They passed on the round. That's cool. But that's cool. Not everyone gets it immediately. I will say, like you go long stablecoin issuers. I think that's like a tough business to be in. But on this point, I go back to public companies. Like, would you rather like user aggregation theory? I think will continue to be a thing. Like if you own the end customer relationship, you will dictate terms and you should be capturing more value. And exchanges have proved that in crypto. Anyone that disagrees, I think just doesn't really understand how the world works. So like, would you rather invest in a startup that is trying to build distribution, or would you rather buy something that already has distribution, i.e. Robinhood? And just you take the view that these guys, if they're sharp, if they're founder-led organizations like Vlad and the Collison brothers, they're going to immediately say, holy shit, I can leverage this thing to go borderless, like basically just cut costs. And so Robinhood's like not necessarily cheap in the public markets, but it's growing faster. And you could say, the difference between Robinhood and Western Union. Western Union is not founder-led organization. It's a guy that's getting paid $10 million a year, sit on his chair and has his cronies on the board and has no incentive to innovate and just wants to reap $10 million a year versus Robinhood. And it's a very different type of organization. I know you guys are venture investors, but like, I don't know, like, how do you think about like this idea of distribution? Like, would you rather, because crypto, I think, has struggled with like getting into the mainstream. Like, it's really hard to convince normal users to use this stuff. It's like tough in places like Latin America. Like people, I think, oversimplify the stablecoin thesis because there's very few people I think that understand payments really well. Rob, we keep referencing you in the pod. This is why we are having this with you. But I'm curious from your standpoint, like, where is the stablecoin, like, where are the things that you see the most amount of disruption happening for like large companies? Because I think people just have this grand statement that says stablecoins are going to rule the world, but that's not necessarily like true. So anyways, a lot there, but I'm just kind of curious.
Yeah, so I think you said 2 things, and I agree with both of them. So the first is, I wrote an article last year about, kind of where like value accrual sits and like the stablecoin payment stack. And I talked specifically about like consumer fintechs. So, these brand new fintechs that were starting, they were saying, okay, well, we have, stable coins on the back end. We have non-custodial wallet. We have, card issued by Rain. Like these things are very easy to put together today because like all of the infrastructure providers, you can piece them together pretty quickly. And then you're really just in a knife fight to go and like win local distribution in geographies that are not monolithic and that are hard to compete in. And so I think it is really, really hard to start a new, call it consumer fintech, with the pitch being, hey, I have stablecoins, right? And I think that's especially true because you already have people who have distribution, like a Revolut or like a Monza, which is back from the dead, or like an N26 or a bunch of others, right? A new bank, for instance, who are going to probably just rip out some of their infrastructure or going to add a non-custodial wallet on top of that, or as another product, which then has the same benefits. And so I would much rather find something that has distribution and rip out the current existing infrastructure and sell them something, which I know, Santi, is the thesis that you have. And I think it's the right one because it's much easier to put new technology in front of a captive user base than it is to build a new consumer fintech and a market that is really all about just distribution. Everyone kind of has the same, the same tech. There's no moat there. So I think that's number one. I think to your second question, which is like where we see it affecting like the large companies, we've seen things like, it being used for, payouts for employees and for contractors, and that being, really popular. I think maybe one area that we haven't seen pick up yet, but I've started to see some evidence of, is like cross-border treasury management. So like the treasuries at these like large Fortune 1000s, like it's a disaster trying to move money across their subsidiaries and, across maybe their suppliers. Depending on the corridor, it might take 7 days for, something to settle. It's really capital inefficient. Things get lost, right? I was talking to somebody this week at Money 2020 who was saying, I was trying to move $2 million to an African subsidiary to just, pay a supplier. And, it's a really big company, a known company. And I used JP Morgan, and JP Morgan lost my $2 million for 14 days. And like, it's a company that is doing this all the time. And that type of thing continues to happen. And so if you have stable coins and that people can actually use that are in an easy way to manage them, that's not going to happen. And it is on a public ledger. Where it sits. You have the ability to track it really quickly and to go past the correspondent banking system. But beyond that, a lot of those guys, they want yield, they want other products within their treasury, and they want to be able to do things like instantaneous swapping with like BUIDL, right? They want to be able to do that with other type of yield-bearing products. And they can't do any of that if they in their current treasuries. And so I think that's probably an area we'll start to see people or we'll start to see like Fortune 100s and Fortune 1000s start to actually adopt stablecoins and tokenized assets broadly.
I've got some breaking news to share.
Shoot, what is it, Yana?
We got a nice little Twitter post. X is joining forces with Polymarket as the official prediction market partner. Any thoughts on this one?
Oh, nice.
I'll chime in as a Polymarket shareholder. This is I think pretty exciting, but I think more broadly, like they've just done an incredible job with being in like the mind share of the election, but even outside of the election with things like the superconductor chip, and when Sam Altman was fired, and people were speculating on whether or not he was likely to come back. Like they've been in the forefront of just the conversation. And Twitter is at the forefront of the conversation, and bringing those two things together is, a no-brainer in my mind.
Yeah. I mean, I remember meeting Shane way back in the day. I was a Parify, and we were co-invested with, Nick Tamayanos fund, One Confirmation.
Yep.
We were, and I think Parify is the largest holder now at this point. And Shane was one of those guys who was like, listen, there is a possibility to change how information gets surfaced. And mind you, this is coming from a point where like Augur didn't go anywhere. And I think it's a classic example of like, you ought to revisit ideas that have been tried before at a point where the infrastructure was not ready. Going back to stablecoins, Augur, like you cannot have a prediction market when you're not settling with stablecoins. It just introduces so much noise into the equation. And you could have argued other reasons why the Augur like team wasn't like, maybe the best one. They weren't like fully all in. And you could have just like passed immediately on Polymarket because you said the prediction market is never going to go anywhere. But I really respect the team because it's one of those like super grand visions and ideas of how prediction markets are like really fascinating. I would encourage anyone to just go read about like just the potential to really transform media and how like informations get surfaced. And I mean, it's really amazing what they've done, to be honest. It's like one of the few companies in crypto that it's from the bottom up, like it's like surfaced into the mainstream, is like captured a lot of attention. And yeah, it's really cool to do that. I wonder if the next step is like for Twitter to like get more and more into like stable coins and payments, like natively.
Yeah, it seems like,
because I mean, it feels like they just rolled out chat, right? So if you roll out chat, like the next thing that inevitably comes is the ability to send payments to someone. So
yeah. What does this look like on the timeline? Like, is it like through there?
They don't have it yet. It's not live yet. But you got to have you guys seen what they're doing with sports? So you can actually like they have these separate sections for like the NBA and NFL games where you can like watch the games inside of your app with different licensing deals that they have, and then you can comment on the games and you can talk. And I think I've heard they're going to roll out betting inside of the app too. You got to imagine you'll be able to just like bet like will Elon stay with Trump through June? Boom, prediction markets embedded inside. So, all right, switching gears to another company that has done a good job of penetrating mainstream, but is also a little controversial, is Ripple. Rob, you guys were, I think, shareholders of Hidden Road, which they sold to.
That's right.
I would love to hear your guys' take on the Ripple strategy, and if you think that they can build a dominant business just on the back of this like weird strategy of accumulating a massive treasury and maybe buying their way into a good business. I would love to.
Can I just interject and say that I hate talking about Rob's portfolio? I just want to make sure that that's clear, that this should not be a trend. The only thing worse
There's
than
just too many
talking
of my
to
portfolio
Rob,
companies that are doing well. I'm sorry, Diogo.
Rob,
you could just start copying Dragonfly's investments like that.
It's always a possibility, Diogo. I promise.
Diogo's like, I'm not having fun anymore.
No, so listen, I think to that point, I think absolutely, right? Like, I think there is no doubt that if you have a lot of capital, that you can buy yourself into an actual business, right? And like, it's hard. It's not easy. You have to be able to, pick the right businesses. You have to be able to integrate them. You have to have a good vision and understand where distribution comes from and value accrual comes from. But you can absolutely do it. And, I think if you talk to Brad today, like they're really focused on RLUSD. They want to become a competitor in the stablecoin space. Hidden Road is a very, I think, savvy buy for them in terms of wanting to distribute RLUSD. It's a business that is very capital intensive, that it requires a lot of collateral, it requires a lot of debt capital. You end up actually distributing a lot to a lot of different counterparties. And so I expect we'll see billions of dollars of new RLUSD issued just through Hidden Road. Now, add in things like, they bought Medico. I know that they're looking at a lot of different type of businesses right now. Like, I expect that they'll be able to distribute their stablecoin through those businesses, and that all of a sudden we'll be talking about them as a major player, as a top 3 to 4 stablecoin issuer potentially, within the relatively near term.
You think Ripple could be you think Ripple in the relatively near term would be a top 3 stablecoin issuer?
I think that is their goal. I think it is certainly possible if they execute really well. I think they'll be a top 5 stablecoin issuer, probably almost certainly in the next, call it 24 to 36 months, if they are able to execute the things that they are saying that they are doing, the transactions that they've they've executed so far, and other ones that I think they'll probably continue to be pretty active. I think it's very possible that they essentially buy themselves into that business. And I'm a believer, and Diogo might disagree with this, and Santi, now you might as well, but I'm a believer there will probably be like 5 to 7 stablecoin issuers that actually matter. I don't think it'll be that much less than that. I don't think it'll be 2 like it is today, but I also don't think it'll be 1,000. And so I expect that they will be one of those.
With that one answer, Rob just lost his spicy Rob moniker. It was too politically correct. I'm sorry, Rob.
All right, go for it, Diogo. Hit us.
I mean, in general, look, it is what it is. I think they have basically no chance at getting a stable coin to be successful. It's extremely hard to get in. There's anywhere from obviously like massive distribution advantages already, massive balance sheets. I mean, look at this IPO, right? I think just crossed $20 billion market cap, Circle did just now, right? And so, I mean, the amount of money that they're against, not even Ripple has that much money. Yeah.
Well, if you look at their XRP, they do. They've got like $100 billion of XRP.
I was going to say,
they have to sell it. They have to sell it. The moment they start selling it, it's different, right? They have to sell it. Once they start selling those
Do
amounts
they
into market,
do they have
it
to
makes a
sell it, or
difference.
could they like do creative structures behind it?
It can do creative structures, but at the end of the day, it's just like it's sell pressure.
Oh, this is crazy. 110. No. I think though, just to be clear,
Jeff Dorman is crashing out right now, hard.
Crashing.
Oh my God! You can just imagine staring at that all day and be like, "Fuck."
I just Santi, on your one question about like can they do creative structures with the XRP? I think there are ways to do it. I think it is tough. I think you probably can't use it as consideration. You have to somehow turn it into cash beforehand for like tax reasons. But their whole business for the last call it like 5 years has been actually just selling XRP. They have a defined amount that they can sell every quarter, and they put out a kind of a quarterly report that says how much we actually sold. And they can continue to do that, and at the prices that XRP is, and it's continued to go up. Like they can raise a lot of capital that way, but there's no reason they shouldn't be able to like borrow against it. There's no reason that they shouldn't be able to do like other things that provide cash. And plus, they have equity that they've actually continued to use, and some of the transactions that they're doing, and has a secondary market that is in the billions of dollars. And so I don't know why they can't continue to buy things, and if they do a good job, fix that distribution. So
yeah, I agree with that, but there's a big hypothesis. If they continue doing a good job, they need to integrate. And I think some of the acquisitions already have, they have not
Rob and Diogo, what is the biggest thing that you guys disagree on?
Do we disagree on anything?
Well, we just disagreed on this. So. Yeah.
Well, I think we agree more than we disagree. You are now a stockholder, so you're no longer an objective. You're a very.
I don't own any Ripple stock, just to be clear.
What do we disagree on?
So I think Diogo and I have a lot of things that we agree on. I think we've been among the most active like stablecoin investors. I think we've been among the most active in terms of thinking a lot about like fintech, crypto crossover. I think where we probably are a little more constructive than Diogo, and he might disagree here, as he's like very focused on like regulated assets on chain, which I continue to think is going to happen as well. But I think there will continue to be a really robust non-custodial, non-KYC financial system that exists on chain as well. I think we're really constructive around that. I think there is going to be more privacy in the future than there is today. I think we've already seen a bit of a pushback on broad KYC, and there not being like a central repository. And you have these points of failure now where every single company has to become basically like an IT company and figure out how to protect PII. And so I think we'll actually see a little bit of deregulation in terms of DeFi in a lot of parts of the world. And so I think we're pretty constructive on things like that. And I don't think that it's necessarily true that like all of crypto is going to become like a like Web 2.5 like regulated ecosystem that Satoshi would roll over in his grave and just completely hate.
Disagreements. You just have to go to our portfolios and see what is
who's performing better right now, Dragonfly or Haun?
We don't know each other's performances, but
it depends.
Let's do it in a zero knowledge way, right?
It's a kind of a difficult. It is not to like dwell too much into this. Maybe we can start off in the next segment that we do. Because we should have you guys on more regularly. Is the valuation methodologies are just different. It's actually really hard. Like, how do you like?
I wonder how if we have more equity positions than Dragonfly does. I feel like we probably do overall.
What you're saying, strictly equity that are never going to have a token, or just?
That's right.
Oh,
that's
okay.
right. Yeah, I think I would say so. Also, our funds are differently structured. We have a growth fund, which is a $1 billion growth stage fund, acceleration fund. That's pretty big. So that just meaningfully makes the portfolio very different. But clearly, Rob and I have disagreements, but they're usually investment disagreements. There's many investments that we've obviously both of our funds have looked at it and we passed on, or vice versa, that the other one ended up investing in. So that definitely, like, you can compose it as these agreements, but it's actually like, look, of all the venture investors, Rob is actually one of the ones that I very much prefer debating and investing with. I think part of the reason why I was excited to join in is because I actually love teasing Rob and being teased by Rob, and just we have great rapport, and I do think we have co-investments together that are pretty great. So we could also talk about our shared portfolio, not just the ones that are just on Rob's portfolio. That would be my preference.
Hey, Diego, one question is the fact that you have more equity investments intentional, or is that just by virtue of your fund size?
No,
like you haven't found like $1 billion to deploy on like token issuers or like companies that are going to.
You could. It's really about flexibility at the end of the day. I think different phases of crypto will require different decisions, right? These cycles have not all been the same. There's been cycles in which equity has outperformed. There's been cycles in which tokens outperformed, and overall, as you were actually mentioning, Bitcoin has outperformed basically everybody over the very long term. And so there's different takes here. Also, remember that the products that we're selling are very different. They're specific products. They're venture products. They have a specific timeline. They have a specific set of investors and expectations. This is not a one fund type of investment. This is a multi-fund type of commitment from some of these very large sovereign wealth funds. And so the thing that you're selling is a very different product, which then again also means composition of the fund is different. I think if somebody wanted just a liquid portfolio and not a hybrid portfolio, there would be vehicles for that.
Yeah. Gents, good chat.
Yeah, this is fun. We should bring out Spicy Rob more often.
Well, Diogo, here's the problem with that nickname. If you agree with Rob on everything, you're Spicy Diogo. So that's the problem, my friend.
I like that. We should just rate each other's stakes. Whenever Rob starts being too political, I should have a button that just, rings like,
we do need some, like,
no, you're being too politically correct
here, to be able to press. So
reject it. Rob is just talking about like.
Wait, by the way, not to make a permissionless plug, which I never do plugs. Yano always does a plug.
Oh, are you guys forgot it again? I forgot.
Yeah, well, I'm just gonna say, are you guys gonna be a permissionless?
Yes, I will be there.
Rob?
So I'm actually not, because I'm speaking at.
So now we should have the button.
No. So the specific reason is I agreed to speak at Goldman's Digital Asset Summit many months ago, and I started my career at Goldman.
The one in London?
Yeah, the one in London, and it's the same exact week. So I'm actually leaving New York.
That's the spiciest take we've had on this podcast.
We put it in Brooklyn for you, Rob. It's like 7-minute walk from your house.
I probably could walk there. And so I'm very bummed out. I'm going to give Hasib my apartment so he can walk there, because I know he's speaking and coming from Seattle.
Well, Rob, we might have to have Hasib on, and he might, there's a high probability. I mean, there's a risk that he might replace you.
Replacement risk incoming.
You went from Spicy Rob to uninvited Rob.
You don't want the downgrade, right? You got to keep it on me. Come on.
Yeah.
Finally, Spicy Rob comes back. Okay.
Spicy Rob gets fired after that comment. So.
I was going to say, I don't want to get in the mix of that. But anyways, gents, thanks for coming on. We'll have to have you on again. Appreciate the time.
Yeah, be well.
Thanks, guys. This is fun.